Bethany.
Jamil.
Nice to see you.
Nice to see you.
So you're quite famous in the community of capital raising. Tell the people who are watching that are in my world what you do.
I am a securities lawyer. And so what I do is help people use OPM, other people's money, safely to scale their business.
Okay, so if you have ever thought about, I'd like to do more business, but I don't have enough money to do it. Maybe I'll start raising funds. Or I'd love to flip this house. Maybe I can ask my uncle if he wants to loan me money. And what the difference of those two situations are, right? Borrowing money from somebody who's a family friend, someone that you know to help you on a one-off deal versus going to the public and raising capital to buy bigger purchases. And so, guys, today's video is going to dive into that, what the legalities are between the different types of capital raising that you can do, and how you're going to keep your ass out of jail when you are raising capital. Because trust me, one of the things that I've said many times before is that the fastest way to an episode of American Greed is raising capital. Yay! So, without further ado, how does one not end up on an episode of American Greed when they're raising money?
Well, okay, so the first thing is to figure out what it is you should be doing. Figure out your lane, that's what I always say. And then for everything else, you go find people that are good at everything else that you're not good at. That's going to keep you out of trouble.
So be a master at something. And if you're not a master at something, then find somebody who's a master at something so that when you are raising capital, the operator that you're involved in is going to know what they're doing. They're going to be competent. The fact that the reality of the model actually working and not tanking and losing money is much greater. The likelihood of it working is much greater than if it was just somebody who decided, I'm going to flip apartment buildings today.
Right. That's right. You know, it's kind of cool because it means you actually get to do less work. You get to do only things that you love to do, only things that you're good at, and then nothing else. I call it the power of OPE, other people's everything. So other people's money's fine, but you really need to have some lanes covered before you start taking other people's money responsibly.
So let's dive into that, right? Because I think a lot of people find it counterintuitive to think, wait, why would I raise money for somebody else and not for myself? So what does that look like? You know, raising money for somebody else. I've heard the term used, fund of funds.
Fund of funds, yeah.
And is that pretty much what that entails?
Yeah.
Okay.
So let's back up for 1 second, because typically to get paid to raise capital, you actually need to be a licensed broker-dealer, not a licensed real estate broker, a FINRA-registered broker-dealer.
If you want to go to the public and say, send me your money.
And take a fee for it.
And take a fee for
right.
it. What if you don't take a fee for it?
If you don't take a fee for it, there are exemptions, right, from having to have that license. One of those exemptions is you see companies out raising money to operate. Facebook had to raise money to operate. There aren't really capital raises in Facebook. They were raising capital so they could operate Facebook. It's called the issuer's exemption. So the reason that you and Pace, for example, are able to raise money for your fund is because you're using it to operate your syndication business. Right.
So it's for our own thing.
For your own thing. So you didn't need to have that license. Now, a fund of funds is this kind of cool hybrid where you are actually raising capital. You're not a registered broker dealer.
Right.
You're not an operator. And so you've got other requirements and regulations that you have to follow, right? So you've got the SEC. They're wanting to make sure that you give whatever disclosures are appropriate to your investors if they're passive. Then you've got investment advisory rules and the Investors Company Act Investment Company Act that you have to follow when you're acting like an investment advisor in a fund of funds. So it gets kind of technical, but the bottom line is if you hire somebody who knows what the heck they're doing, your OPE, right, then you don't actually have to know all those rules. You just have to stay within the guardrails that I set for you.
Oh, so you are the individual who tells us you can do that, you can't do that, you should say it this way, you shouldn't say it that way. Yeah. And does that mean that you're like monitoring the promotional items, the webinars, and more involved in that aspect of it just to make sure that things are above board?
Yeah, depending on the level of the engagement. But yeah, we at least do a one-time review of a website and social media posts is usually what it is. We always review the pitch deck or the business plan, the slides that are telling investors, this is an awesome deal, you should invest. We make sure that's compliant because the thing people have to remember is every word you say to the public, a potential investor, becomes part of the offering when you have a deal. So if you promise something on social media, it needs to be accurate. First of all, you shouldn't be promising anything, but whatever you say on social media needs to be accurate. So if it requires a disclaimer or more context to not be misleading, then you shouldn't be saying it. And so that's how I advise people is this is what you should say, this is what you shouldn't say, this is how you should say it. And what we do is we teach you how to do that. We teach you to stay within the guardrails, and then you learn. I don't need to review every single post you did. When I first started working with AJ, it was kind of funny though. He would text me, can I tweet this? This is so cool. Tweet. He would text him now he's trained. He doesn't do that anymore.
Awesome. Well, it seems to me like you might be the hub for these really incredible operators. Are you allowed to refer people to specific operators that you think are highly vetted, really good at what they do, offering great returns? Is that something that you provide people as a service if they're looking to place funds?
If they ask me, I don't go out and seek it. And if they ask me, then I will send them to operators that I know are good. I don't outwardly endorse deals. You can imagine the problems that could cause endorsing deals. But what I can say is, this is a client of mine. I know that they're following the rules. And this is really critical, I do not take a fee for it.
Right.
Because I'm not licensed to take a fee for it.
Understood.
Yeah.
Okay, so if somebody does that, you're literally just doing that out of the goodness of your heart to direct somebody in a good spot. It's not going to be a financial situation for you. So you're not going to take fees. Somebody couldn't pay you for that. That's just literally you saying, I know these people, I've vetted to make sure that they're above board. Otherwise, that's all I can say.
Yeah, we're actually working on, I don't know if Pace told you this because you just started talking to him since you got here, but we're working on a really cool platform, technology platform that will be a playground for LPs and GPs to meet and connect. So we are building technology that will help support those interactions. And my partner in that business, Jared, is trying to get me to do a weekly show where I put some operators on the hot seat when they have a live deal and let passives come listen to them get grilled by me.
That's so good. Well, it's interesting because I was recently investing in syndications, and the market did what it did. And interestingly enough, when it's a bull market and things are going well, every syndicator is a genius.
Yeah.
Right.
Yeah.
And then when things are not going well, I reached out to the person that I was involved. There was multiple deals. And some of the operators are very transparent. They're very communicative, and they're telling me we're having problems. And I listen, for me as an investor, not only in my own deals, but in other people's deals, I just like people answering the phone. I want to hear, okay, things aren't going well, but we're not hiding. Right. Versus, hey man, I'm not in that business anymore. You need to talk to this person now. Yeah. Which has been the 50-50 of what I've been seeing, right? So I want to rewind a little bit because I think that we were in an extremely interesting time when everybody appeared to be a genius, and now the tide is out and we can see who's wearing trunks.
Exactly.
Right?
Exactly.
So tell me about what you experienced and what you saw in that time, and are there any classes of real estate that you're seeing there being more problems within the next 24 months that people could be looking for opportunities in?
So we know we've seen a little bit of a change. I won't say, it's not a disaster at this point, but a little bit of change in multifamily. And that's where I saw a lot of brand new operators pop up over the last few years. So there's been some changing of the guard in some of those deals, right? Where it's, they bring in another sponsor to help manage that kind of thing. So multifamily has taken a little bit of a hit, but we have some really great operators. They're doing great things. I wouldn't say multifamily in general is a bad. So I don't want somebody to be like, Bethany said, don't invest in multifamily. That's not what I'm saying. What I'm saying is invest with good operators.
Right. Because they'll understand the marketplace right now. They'll understand the financing marketplace. They'll know how much time they need, how much time they have, what makes a good investment sense, what doesn't make good investment sense. And so I think that's phenomenal advice. It's always about the people less than it is the deal, right?
Always, yes.
So thinking about that, right? Because I've got a lot of people in my world that are brand new or have just gone through the last, year of building capital wholesaling, which is what I specialize in. Wholesaling, if you're not familiar with it, is just selling your contractual rights in a deal to make quick money, right? And so because the people that typically follow me find situations where they can make $30,000, $40,000, or $50,000 very quickly, they often are like, I don't know what to do with this money because wholesaling doesn't cost a lot of money, but it can create cash and people want to know where to put it, right? And so looking at it from that perspective, what would you say is the most secure type of way for somebody to invest without putting your foot in your mouth, right? So, do you think private loans to friends?
No. It's no.
Oh.
And the reason I say that is, So it depends on your definition of friends. Like Pace's definition of friends is
Everybody.
the people, right? Everybody that he comes into contact with, and okay,
Yes.
so then you just have to make sure you have a really good contract, right? To make a business out of loaning to close personal friends is not usually the best business advice. That's not even really legal advice. It's sort of practical advice, right? But always make sure that you've documented whatever the deal is. So if it should be done with a PPM or private placement memorandum, which is all the risks, if it's a security or it should be a joint venture agreement, you've just got to make sure you document the heck out of whatever the deal terms are so that everybody knows what the deal is while they're still friends.
Right.
So yeah,
And
think
then
about
when
the
they're-
divorce in mind when you get married.
I hope that you guys heard that, right? So think about what the deal is when you're still friends.
Yes.
Because there's a good likelihood that at the end of the deal, you may not be friends anymore. So thinking about it from that perspective, do you really want to loan your cousin, your brother, your sister, or your auntie that money that you just made on your first or second wholesale deal? Maybe you should keep it in the bank and do something else with it. But seeing that, right, what would be a violation, right? Because I hear and I see so many things on social media, and I kind of want to know from you what would land me in prison versus what wouldn't land me in prison.
Right. Okay.
So if I write on my Instagram, 14% guaranteed return, jail or no jail?
Probably no jail.
No jail.
But
Okay.
Probably no jail. But if you you could be in a position where you have to actually return all the investors' money,
Okay.
because it was misleading, right? So
Okay.
you
What
should
if I
never
do?
promise.
What if I do get that return? Is it still
Well,
misleading?
okay, so here's what my partner Mauricio and I called the good deal defense.
Okay.
Right? The past few years, everybody's been able to rely on the good deal defense, meaning, if investors are complaining because they're making money hand over fist because
Sure.
of you, or not even because of you, because of the market, right? If they're making money, then you may never, no one may ever complain, so you may never get busted, right? And so if there's a turn on the market or something happens at the property and now investors are complaining, that's usually how the SEC is going to get alerted to these things. I mean, they do their own investigations, but the SEC is not out looking at your social media posts for the most part, unless someone tips them off that, hey, this guy's, he's making some promises that maybe he shouldn't make, right? And so then you could get looked at. But usually in that case, it's like, hey, you shouldn't do that. Take it down and maybe return all those investors' money.
Got it.
The jail is reserved for like the really bad boys, right?
Okay.
And
So maybe a lawsuit, but not jail.
right.
Okay.
Yeah.
What if I say, hey guys, loan me $250,000, but don't tell anybody that we're not actually close friends? Jail or no jail?
That actually could get you there. That could get you into jail. You have to be very careful when you're dealing with, I'd say maybe not 250,000, but when you're dealing with non-accredited investors. So anybody who's making less than $200,000 a year for the past few years, 300 with their spouse, or anybody who's got under $1 million in net worth. If you're dealing with non-accredited investors, the protections are a lot higher. Your responsibilities to them are a lot higher. The government sort of takes this position that people are somehow less sophisticated if they don't have as much money, which is not necessarily true, but it is how the law works, right? So if you need to have that substantial relationship, that means that you probably will need to take non-accredited investors, right? I know you guys like the little guy, right?
Yeah,
You guys like to help the little guy.
Exactly.
So if you're under certain exemptions, you guys did it right. You're doing the Reg CF, where you can actually do both. You can advertise and you can take them out of
That's crowdfunding. where you can-
yes,
yeah.
crowdfunding, or Reg A Plus, like Grant Cardone does, right? So you can advertise, because people ask me this all the time. Well, how come Grant can do it? First of all, Grant's not my client, so I don't always know how Grant can do what Grant does, so I can't answer to that, right? However, how he does advertise and take $5,000 a pop from people who are probably not accredited is Reg A Plus. So there are things that you can do, but that is, if you ask him, he'll tell you probably openly it costs him probably close to $100,000 to do it,
Right.
and it took about 9 months.
And this isn't from him, but from people that do that, I've heard that just the amount of red tape, the amount of hand-holding, and the amount of infrastructure that's required to make that type of investment make sense is very costly and normally not the best route for people to take.
Most people, even bigger syndicators, can get what they need done under Reg D, which is 506B and 506C. That's what you hear the most about. And the reason for that is it's an exemption from registration, whereas CF or A+, those are like mini IPOs, like mini public offerings. You've got to get the SEC involved. They've got to bless it, right? Reg D, 506B, and 506C are an exemption. So that's why you have to give so many disclosures, though, right? And you've got to make sure that if they're not accredited, you're taking care of making sure that they know what they're getting into. So when you say, hey, I don't even know you that well, don't tell anybody I don't know you that well, that where you get into trouble is the minute they've lost money, they are not a good witness for you.
Right.
They're going to say, I don't know this guy. He actually just solicited me off the internet and sold me out on all my money. Right.
That's exactly. I mean, if you're going to lose somebody's money, that's basically what they're going to say, regardless of what happened.
Which is why you need to make sure that you've documented the deal from the beginning to the end in a way that is going to satisfy the SEC if they're investigating you.
What are some of those documentation processes?
So the first thing, if you're going to allow non-accrediteds under 506B, you need to document how you know that person. How did they come into your world? How did you actually feel comfortable enough to solicit them to come into your deal? They actually
What if they slid into my DMs?
This is not where you want to slide into. Actually, is there any circumstance where you want to slide into?
That's how I met Pace.
Okay, partners is fine. As partners is fine.
DMs.
He slid into your DMs. That actually tracks. That tracks. So some of the documentation is make sure you document how you know the people and that you've got an established relationship, that you've given them a questionnaire, you know how much they make, you know what their investment goals are, those kinds of things. And then keep a good record in your CRM all the way through. And then when you're getting ready to take the money, you need to do what's called a private placement memorandum, which is a scary document, a PPM we call it, a scary document that tells them all the risks associated with the deal, all the fees that the people running the deal are going to take, and what they're getting. What are you offering? Is there a preferred return? What are the splits? When do you expect to start paying those splits? What's your exit strategy? So all those things are going to go into the PPM.
Wait, PPM's not a song by Naughty by Nature.
No, but that one I think of every time I say OPE. I'm not going to lie. Every time.
Yeah,
so now it's
me.
Every time. It's in my head right now. I'm kind of mad at you now.
That's great. I hope it stays there all day.
It will.
Yeah.
It will.
Guys, look, I am never going to be the person that tells you don't raise capital, don't go out and do big deals. Do big deals, raise capital, get yourself uncomfortable, learn, and partner with people that are doing a good job. And I would absolutely say in the beginning, if you are looking at this world, if you're looking at raising capital, doing syndications, go and watch somebody, see how people are operating. Again, AJ Osborne, he's an incredible operator. Right now, he is raising money for his his self-storage units. You can reach out to him and kind of follow him around. If you invest a little bit of money, see the entire process, learn what he's doing. Pace has his sub 2 fund right now where he's only buying creative deals in his fund, but you could possibly get involved with that and see the process and learn. Again, I'm not giving you any recommendations here. I'm just telling you that there's so many people out there that you could invest with, that you could learn from before you take that leap, before you decide, I'm going to start raising capital. Because again, when you take people's money, it's a very serious thing. And I think one of the most important, I would say, ethical principles that I like to follow, especially if I'm working with an investor who's bringing capital to the table, is to always treat other people's money better than I would treat my own money. Because look, at the end of the day, I can lose my money because of a mistake that I've made, and I can still sleep at night and know that I learned something, right? Because I can take the lesson and learn from it, and that is how I can justify the loss. But when you take somebody else's money and they don't have the opportunity to learn from that loss, you've done them a great disservice. And I believe that when you are going to be in that situation or that position of trust, it's very important that you dot all your I's, you cross all your T's. And if you are looking to get involved in syndications, that you reach out to somebody like Bethany and you do it the correct way, where you have a OPP or a PPM in place.
But always use OPE.
But always use OPE, which is other people's everything.
That's right.
To make sure that you're doing it correctly. So before we wrap up here, how do people get a hold of you?
You can follow me on Instagram, Bethany_LaFlam. You can always get in touch with my team to do an initial coaching call to see what it is you need, and that is at team@plglp.com.
Guys, get in touch with her. Make sure, again, before you put in yourself into that space, into that world, that you talk to professionals, that you understand all the legalities. And I wish you a tremendous amount of success out there, and maybe sex, but tremendous amount of success out there in your ventures, in raising capital and doing big deals. So good to see you, Bethany.
Thank you for having me. Appreciate you.
Later, guys.